What's up, guys? Mike here. How's it going? Today we're going to be talking credit. So, what is credit? How do we use it? Who can get credit? What do we use it for? And really, what's it all about? And how can we use it to our advantage? All right, let's get into it. So first, to understand credit, we have to understand what a credit score is. So a credit score is a number assigned to you between 350 and 900, and this score is reported by Equifax and the TransUnion bureaus here in Canada. They essentially work together to read all of your report history, your credit limits, all of your accounts, and everything credit related to report an easy to understand, simple score. So essentially, your financial lenders that you're looking to take money from will look at this score and it gives them a quick snapshot of your financial history and will help them determine how eligible you are for their lending power. So, who can get credit? Essentially, if you are a Canadian resident, I use Canada because this is where I'm located, but the same idea works in the United States as well. Essentially, if you're a Canadian resident over the age of 18 years old, you are going to have a credit file with the bureaus and you will have an assigned credit score too as well. Why is a credit score so important anyway? Well, essentially, this credit score is going to be used by any sort of financial lender, whether that's a car dealership, a bank, if you're looking for a loan or a line of credit. This can be even credit card companies if you're looking for a new credit card. The better you look through your credit score and through the credit bureaus, the more likely you are to gain not only approval, but a higher limit. So if you're looking for a mortgage, you're more likely to get a higher limit on your mortgage and be able to afford a bigger and nicer house. Or if it's a car, you're more likely to get approved for a more expensive, nicer car. If you're doing a credit line or loan for business, you're more likely to get banks or lenders to be more interested in lending you a much higher amount of money if you have a better score and a better history behind you. So you can already see how important this can be and really how powerful it can be to either help you on personally or to grow a business in the future. What is the score based on exactly? So your credit score is based on a number of things. First, you have number of accounts. So the more accounts that you have open and you're able to pay down the lines or maintain balances on credit cards, pay them off, or maintain your payments on lines of credit and loans, the better that looks. They actually say you can obtain a perfect 900 score unless you have at least 21 accounts open. So you can see right from the get-go, you're going to want to try to get a lot of accounts open and keep them in good standing. The second thing that affects your score is credit utilization ratio. So essentially what that is the ratio of credit that you are using or credit that's extended to you over the amount available. So this is especially important when you're talking about credit cards. So for example, if you have a $1,000 credit card and you have $500 on it, you have a 50% credit utilization ratio. And that generally doesn't look fantastic in your favor. That's why people always say pay your credit cards off as quick as possible. Not only are you not paying interest in that way, but then your credit utilization ratio is kept down. So they say the magic number is below 30%. And then that way you're really able to take advantage of boosting your credit score by taking care of that category entirely. So the third thing, and I would argue probably the most important thing, would be on-time payments. So you want to make sure that if you can't afford to pay off your entire credit card or you can't afford to pay off an entire loan, which a lot of the time if you're taking a larger loan, that's not the goal anyway, to at least make the agreed upon payment or a minimum payment on your credit card. So hitting your minimum payment, paying your phone bills on time, paying your mortgage on time and things like that all go into a credit history, and you can actually track back and see how many payments you've made on the different lines and just how many times you've missed in the past. And all that goes into account when people are looking at loaning you out money. So make sure that you're being very diligent in paying off of your payments, your credit card bills, and things like that, because it really goes a long way. So the fourth thing would be the amount of credit available to you. This kind of intuitively makes sense if people see that you actually have a lot of credit extended to you already. They're likely that you are making payments and that you are paying attention to how much money you owe on a monthly basis and you're taking care of everything financially. Therefore, the next lender is likely to keep lending you money if you have a really high limit. And this can be combined through a number of different credit cards and accounts. You can have a mortgage, maybe you have a auto loan, and then maybe you have 2 or 3 credit cards or something like that. They take that all into account. And as that number keeps getting bigger, it all goes towards that top end credit limit. Now we know some of the main categories that will actually impact your credit and what can potentially help out your credit and the factors that make up the credit score. Now, what are some of the things that you can do to actually improve your credit if you have poor credit or you have no credit at all and you're just starting out? One big thing is, especially just starting out, is just get some sort of credit. Generally, loans will be a really hard way to start. So my recommendation would just be getting your very first credit card. So there are some really good outlets that will help you, especially for people with low or no credit. Capital One is one of the companies that comes to mind, and they will actually extend either secured or unsecured cards to people who have poor credit or actually have no credit at all. So my suggestion would be find one of these lenders. If you have no credit, they'll do a secured credit card. You'll give them something like $500, and then they will hold that $500, and then now that's your limit. So you can kind of think of it as like a prepaid Visa, but it's a full-on credit card, and it'll be gaining you credit. So it's actually to your advantage to use something like that. Once they have that $500, you're allowed to use that as a regular credit card, and then you just pay the balance off on a monthly basis, and then you have that $500 to work with. And then eventually you'll start building credit and lenders will trust you more. You can apply for another non-secured credit card and then just get a traditional credit card after that. And then you can just keep compounding that. All of a sudden you'll have more cards, more lines. You keep paying those off. You'll get higher limits as you go, and then now you can start thinking about looking into loaning a car, or you can go take a look and get pre-approved for a mortgage, and you're much more likely because now you have some credit history behind you, and that always bodes really well for you. Next, I want to talk about what are some of the different things that you can do with credit. Obviously, there's the clear personal advantages. You can buy your own house, you can buy a car, you can take a loan for, home renovations or school or something like that. But also there's a whole business opportunity side to lending as well. And generally speaking, when you're first starting up a new company, companies are going to want you to actually put your credit, your personal credit rather, on file with them, and they will actually look into your personal credit history and look how credible you are as a business owner and business operator. And then they will apply that to the business, and that's how you start establishing your business line of credit. If you have an existing business, you're thinking about starting a new business, and you are going to need capital for that, you definitely want to make sure that your personal credit situation is in a really positive standing. You have a really good credit score, and you don't owe too much money, more than you can handle on a monthly basis. And then you can actually leverage your personal credit to get business credit. So that can be super powerful if you need to pay things like inventory, pay salaries, if you want to start hiring people, if you're going through a growth phase in your business. Or you can also start a semi-passive or passive business as well, and you leverage that business credit or personal credit loans to actually kickstart that. Now you actually have some credit, you have some credibility, and you have a good credit score and some history behind you. What can I do to increase that and start making it actually valuable to myself? One of the biggest things is you want to just keep taking out credit cards. It sounds counterintuitive, and I know people think that you have a lot of credit cards under your name and that looks bad. There's a lot of misconception with this, but actually it bodes well because, again, the more accounts you have, the more credit you have extended, the better it looks on you as an individual. So you want to actually take out credit cards on a 6-month basis if you're really trying to push hard and get that perfect credit score as near to as possible. And then through those multiple lines, you now have a ton of credit available to you. So you are able to utilize it for things like business purchases. If you need to make a quick purchase that you can pay off by the end of the month, these credit cards are a fantastic way to do that. If you're watching this video and you're like, I don't even know what my credit is now, if I have any credit history, or maybe you know that you might have some poor credit tendencies now or had some in the past. So the best thing that I suggest is just benchmarking, getting to know exactly what your credit history is, where you are, and what exactly you're working with. So Credit Karma actually offers a free service. So if you go to creditkarma.ca, you can sign up for a free account. They don't do a hard credit pull, a soft credit pull, or anything like that. So you can actually go on there, log in. They're going to ask you a couple of personal questions. They'll probably ask for a bunch of personal information just so they can make sure that they're referencing the right person when they're pulling the files. And from there, on that dashboard, you can actually see the entire history of all of your credit applications, all of the open accounts you have now, all of the loans and mortgages and stuff like that if you have any. And then you can see your credit score in there as well. Keep in mind, Credit Karma is a third-party service, and it's relatively accurate, but not 100%. The only way to get 100% accuracy is to request a report from either Equifax or TransUnion here in Canada. And for that, there's about a $70 charge. So I generally say Credit Karma is fantastic because you can check anytime. They don't do credit checks for doing it, and there's no fee associated if you just want to get a rough idea for where you are. And in the long term, it generally does give you a pretty good idea. So that's the first place that I would start, and then just establish that baseline of where you're at, or roughly where you're at, and then you can start using some of these tips to build and grow from there. All right, guys, now we have a bit of understanding of what credit is, what it can do for you, what you can do with it, and you can understand how to work with it a little bit. So drop a comment down below. Let me know what you're going to do with your credit when you start getting it up. What kind of ideas do you have for businesses, or what kind of loan are you going for? What kind of mortgage are you going for? I'm always really excited to hear what other people are doing with their credit, because it's actually just such a powerful thing, and too few people take advantage of what it can truly offer for you and how it can change your life in a lot of really cool ways. If that video brought you any value, if you could just smash that like button, that always helps the YouTube algorithm, and that'll help me reach more people and get more knowledge out. And as well, don't forget to subscribe and hit that little notification bell so you can be alerted every single time I post a new video. I'm going to be posting videos every single Wednesday, and we're going to try some different topics. I know we jumped a little bit from finances, a little bit to credit now. We're going to have some Amazon FBA videos coming up. So we're going to teach you some beginner tricks on how you can use credit to build an Amazon FBA business. So that's exactly what I've done, and exactly what I'm in the process of being a practitioner of doing. And I can show you exactly how that's working for me and how I found success doing that. So if you guys are interested in that, just let me know and we can start doing more videos like this. But until next time, take care. Have a good day, guys.